What's up, traders? As promised, here's another market breakdown that you can learn from and understand how you're supposed to approach your trading. So from a reactive perspective and not a predictive perspective. Now, if you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform and I'm a swing trader, as well as running a trading program in which I teach people how to swing trade and how to use our strategies, our swing trading strategies, to trade the Forex market and any market actually in the world. Now, let's go straight in the charts and let's give you guys some free education and analysis. Okay, so a quick update on gold. Now, if you remember, yesterday we were around this area here and we were speaking about the possibility of the market to show some kind of valid entry for a long around this area. Now, if the market would have provided this valid entry, we would have been taking the long. Now, if you remember, I also mentioned that this candle here had already happened. And I told you guys that candles like this mean nothing. Just because there is a rejection candle, it doesn't mean that the market is ready to push to the upside. I told you guys that the market had created with this candle some structure here. So if the market would have broken the structure to the upside, then if also the other conditions of our strategies would have been satisfied, we would have been looking for longs. However, the next candle just broke the zone to the downside in a very aggressive way. So now what we have to do is readjust our analysis. As usual, we need to stay adaptive in the market and react instead of predicting. So at the moment, we must go back to the original plan. Now, what was the original plan? Here from the monthly time frame, it's pretty clear that we have this W formation, and after a W formation, we expect a retracement to the downside. Now, why did we have originally a monthly target at this area? For the simple fact that taking our Fibonacci from the low to the high, this is the area just above the 382, which is the first possible Fibonacci that the market is supposed to hit from a monthly perspective. And at this point, we have very good probability that the market will actually reach our monthly target. Now, from a daily scenario, as we have just seen, this is the reason for which we have the target here. Now, from a daily scenario, what we have just seen is a market that creates a very strong impulse to the downside, creating an equal low. Also, another thing that we have to take into consideration is that the market has basically broken this counter trend line here. So the market broke this counter trend line and created an equal low. So obviously, looking for shorts around this area, especially on the 4-hour time frame, it makes absolutely no sense because you have no structure around this area. The market can just continue melting, but taking a trade from here, you don't have any kind of good risk to reward. So we obviously need to wait for some sort of a retracement before we can considering an entry, or for further continuation to the downside and use the structure that the market has just created to take an entry. Now, here on the daily time frame, it's pretty clear that if you take your Fibonacci from the high to the low, you basically get that the 382 area is right here. And it looks in very good confluence with the trend line. So at the moment, if the market basically starts the retracement, then this is the zone in which I will be monitoring price action with the students for a potential push to the downside, this time all the way to the monthly target. So an extremely good risk to reward on gold. And it's been a long time since we took a position on gold, and this might be the time that we actually get all the conditions fulfilled for this push to the downside to the monthly target, if the retracement will actually start. On the other side, if the market will now from here start a new push to the downside, then that is good anyway, because now we have new structure around this area, and when the market will go and retest this structure, we can use it to take an entry. So at the moment, this is what you're supposed to be looking for on gold, a retracement to the 382 and this counter trend line, now broken and are inside of this area, and obviously also above. So if the market keeps breaking above, anything below this area here, so all the price action that is inside of this area, you need to monitor price action for shorts and a potential valid opportunity to short gold.
Okay, so let's make an update on GBPUSD. So we can clearly see that the market has created this W formation as with all GBP pairs. And also here we're expecting a push to the neckline, or at least we're expecting a push to the 382 of the Fibonacci taken on the previous weekly impulse. So basically from this low to this high, we expect the market to hit at least this 382 here. So given this from the weekly time frame, let's go down on the daily time frame and see what kind of price action we're getting. Now, if we drop down on the daily time frame, we can clearly see that if the market will actually complete this push to the downside, we will also have an M formation that will complete exactly in this area here of previous resistance on the daily time frame now turned support. So this basically increases the probability that the market will hit this area as a confluence area before starting the next move to the upside. Now on the 4-hour time frame, at the moment there isn't really much confluence for the short. You could argue that you have some kind of weird head and shoulders formation in this area with this previous structure. However, at the moment we don't have much. Now, for example, if the market will, for example, break this low here, then on the retest that will be a different story. We would have clear structure to take our trade. Now, at the moment, what we are doing, we are still waiting on GBPUSD. We are waiting for this push to the downside, and we will be monitoring tomorrow price action inside of this area for a potential short opportunity with the students for this push to the downside. So I suggest all of you to do the same thing. Keep GBPUSD on your watch list for this potential push to the downside and completion of this M formation.
What's up, traders? Just a quick update on USDCAD. So as you know, this push to the upside was very much expected, and now from this neckline we're expecting a push to the downside. So from the weekly we are bearish on USDCAD at the moment. So we're expecting the push to the downside. Now if we go on the daily time frame, it's pretty clear that we still have no basically visible proof that the market is ready to move to the downside, except that we are rejecting this previous support now turn resistance with a double top here on the daily time frame. Now on the weekly, where is the target zone? The target zone at the moment will be very simple. When the market will really start to push to the downside, then we will take our Fibonacci from the high to the low here on the weekly leg, and the target area will be at just above basically the -27 of the Fibonacci taken on the previous leg. Why is that? For the simple fact that if you want to have information on the push to the downside, you need to take your Fibonacci on the previous leg, in the same way as if you want information on this retracement, you need to take a Fibonacci on the impulse leg. It's the same concept. So we are expecting this push to the downside on USDCAD to this target. So this is what we have from the weekly. On the daily, the only visible proof that we have is that the market is starting to create a double top. However, at the moment the market is still absolutely bullish on the daily time frame. Now on the 4 hours, what we can clearly see is that we have a market that is still in a perfectly bullish scenario on the 4-hour time frame. We have created this corrective phase basically after this huge impulse to the upside, correction, and then again the start of another impulse to the upside. Now from a structural point of view, on the 4-hour time frame we are also still bullish if you look at the most recent price action. You can clearly see that this area of previous resistance now turned support is still holding as support. So before the market can start to create some signs of a push to the downside, it needs to break below this 4-hour structure. So overall, that is what we have. We want to see the market reach the target. Now I will change the target to black because that is the color I use for targets. And at the moment, what we want to see is the market start to shift from a bullish environment to a bearish environment, both from a structural perspective and environmental perspective on the 4-hour time frame. So we will be monitoring price action on the 4-hour time frame both tomorrow and during next week with students for a potential push to the downside. Okay, so let's speak about EURUSD. So pretty clear that from the weekly time frame we do have very strong support around this area. Now yesterday we were speaking on the daily time frame of basically a situation of uncertainty, but one thing is for sure, on the weekly we have some very strong support around this area, previous resistance here, now turn support around this area. So support, resistance, support, very important structure level, not something we're supposed to ignore in the market. Now on the daily time frame, if you remember yesterday, we were speaking about the fact that the market was basically in an area right here. The market was around this area here, and we were discussing the fact that the market had rejected a high, plus we also have a trend line from the weekly time frame, and it had support at this area given by this area here. It's pretty clear that this was previous support here. You can clearly see it with this green candle here, this rejection candle. Now turn support here plus this trend line. So basically we had a situation in which the market had rejected the high, however it had support. So I told all of you it's better in this type of situations to be basically to stay away from the market and wait and see what the market will do. Will it break to the upside or will it break to the downside? Well, now that situation is not unclear anymore because the market has broken to the downside. However, let me tell you what is the problem. The problem is that the market is sitting exactly at the previous low. So what we're supposed to be doing on EURUSD is waiting for some further push to the downside, as mentioned in yesterday's video. Why? Because when the market will continue, and if it will continue with some push to the downside, then clearly on the weekly time frame it will have broken below this level of structure. Then after this push to the downside, the market will have created an information. So it will have created this information here. And after an information, you expect the market to go for a retest of the neckline basically. And in this particular case, the neckline is exactly the area on the weekly time frame, which is very strong. But the market in this case is approaching it from below. So since it's approaching it from below, it will act as very strong resistance. So overall, this is what we will be monitoring for EURUSD. If the market will go to the downside, then around this area, we will be monitoring price action for a potential long opportunity for the completion of this information. After that, we will be monitoring for shorts around this area for the next impulse to the downside to complete the impulse correction impulse pattern. Now, if you enjoyed this analysis, you can use it in you can basically use it together with your own analysis and your own strategy. And I really do suggest that you basically monitor this setup on EURUSD.
If you enjoyed the video, make sure you smash the like button. It really does support the creation of more free content for all of you, as well as letting me know in the comments below, how do you think I can distribute this free content to you in a better way? Also, if you're interested in learning how we actually trade, so all the rules of our strategies, so the ICI strategy, the WM strategy, and the TLCTL strategy, then make sure you click on the link below. Free basically training and mentorship program will be waiting for you on the website. Looking forward to have you on my next videos.